At Insightful Value, we're always hunting for stocks the market is overlooking, and today's spotlight is on something rare. A utility stock with over 200 years of uninterrupted dividends that's currently trading lower. York Water Company isn't flashy, but it might be one of the steadiest plays out there. Let's unpack why a drop in this historical stock might be more opportunity than red flag. This review is for informational and educational purposes only. It is not financial advice. Founded in 1816, York Water Company holds the title of the oldest investor-owned utility in the United States. It provides water and wastewater services to over 200,000 people in south-central Pennsylvania. Their business is simple, essential, and historically very stable. People need water regardless of market cycles, and York Water has built a long-standing reputation on reliability, regulation compliance, and conservative financial management. The stock has pulled back recently, and some investors are wondering why. The company reported a modest decline in earnings in the latest quarter, largely due to increased operating expenses and higher interest costs, which is a common theme for utility companies in the current high-rate environment. However, the core business remains intact, with solid customer growth and ongoing infrastructure investment. On the financial side, York Water has consistently grown revenue year over year, with 2023 revenues surpassing $60 million. Net margins are relatively healthy for a regulated utility, hovering around 25%, and the return on equity is around 10%. The company maintains a strong balance sheet with conservative debt levels compared to its peers, which is especially important in the current macro environment. Perhaps most appealing to long-term investors is the dividend. York Water has paid consecutive dividends since the early 1800s. That's over 2 centuries without missing a beat. The current yield is around 2.3%, which may not be flashy, but it's backed by over 200 years of discipline. They've also continued to increase the dividend annually, keeping it aligned with inflation and earnings growth. In terms of growth, York Water continues to expand its customer base through acquisitions of nearby water systems and by building out new service lines. While this isn't a high-growth tech stock, its slow and steady strategy means lower volatility and a level of predictability that's increasingly rare in today's market. From a value investing lens, the stock's current dip may reflect a temporary market overreaction to rate pressures rather than a breakdown in fundamentals. If interest rates begin to ease or stabilize, utility stocks like York Water could see capital flow back in. At Insightful Value, we specialize in uncovering stories like this. We provide in-depth research on undervalued or overlooked companies, stripping out the jargon and helping investors focus on the fundamentals. Whether you're just starting or already building a portfolio, we help you find clarity in the noise. For more details on York Water Company and dozens of other hidden gems, visit insightfulvalue.com. And if this video helped you see something new, hit that subscribe button, like the video, and join our growing community of value-minded investors. Insightfulvalue.com is your go-to for smart, clean, actionable investment insights.